All right, what's going on, y'all? It's your boy Tibby back with another one. Welcome back to the Day Trading 101 Bootcamp. Today, we're unlocking a smart money secret known as fair value gaps or FVGs, depending on who you're talking to. This is how I catch my sniper entries with tight risk and high precision. So let's just go ahead and get straight into it, all right? So what is a fair value gap? A fair value gap is an imbalance in price. It forms when there's such an aggressive buying or selling that price skips over levels, leaving a gap between candles. All right. So you'll spot a fair value gap when there's a large candle that pushes up or down. There's a wick on the first candle that doesn't overlap the wick on the third candle. The space in between is going to be the fair value gap. All right. So a lot of times you're going to hear people refer to that aggressive move, buying or selling, as displacement, or that large candle as a displacement. All right. So here we are on the NASDAQ, the NQ, and I want to show you guys what a fair value gap looks like. All right. So right before market closed on Friday, we created two fair value gaps. So I'm going to point them out. I'm going to give y'all a second. Y'all let me know where y'all see them at. All right. So these are fair value gaps right here. These two spaces in between these candles are fair value gaps. So I'm going to explain to you again from what I just said. There's a large candle pushed up or down. The wicks of the first candle doesn't overlap the wick of the third candle, and the space equals a fair value gap. So right here, if you look at the chart, we have this big candle pushed down. That's one candle. And then we have the second candle right here, which is a bigger candle pushed down. And then we have this third candle that pulls back a little bit as a buying candle, right? As a bullish candle, but it doesn't fill this space. So the space in between this third candle and this first candle, that's your fair value gap. So right here, and I'm gonna mark it out so you guys can see right there. Boom, that's a fair value gap. Okay. So why are fair value gaps important? Why do they even matter? So these gaps act like magnets. So price is going to retrace back into that fair value gap, and then it usually will continue in its original direction. And this gives you an entry with built-in logic with amazing risk to reward. Okay, you're able to have a good stop loss, and then you have an idea of what you're targeting next to have a good risk to reward. All right, so here's the checklist for when you're looking for your fair value gap entries. You want to identify the bias from market structure and liquidity, map out those old highs and lows. You want to wait for price to create a fair value gap during the highest volatility during the session. You want to mark out that fair value gap. You're going to wait for price to return to that imbalance and then enter with a stop just beyond the fair value gap or at the swing low, and you're targeting the next pool of liquidity. All right, so for this example, again, we're on NQ again. We're on the 5-minute chart. This was Thursday. So this is an example of my after lunch trade of what I would look for. So I have the lunch low mapped out, which was from 12 to 1 right here. So it's the low and the high. So I will wait for one side to get swept and then the other side to be taken. So as you can see, like, disregard everything that's already happened. But if we just like pay attention to up here, so we see that this was the lunch high. We had a candle at 10:15 that went and took this lunch high out, right? We go up there, we're trading higher. Initially, it looks like we're going to expect higher prices because of this fair value gap that was created, this bullish fair value gap. But price comes back down, and you see this big red candle comes and disrespects this fair value gap, and then also leaves a bearish fair value gap within that. Now mark that one red, right? So like I've mentioned before, is that whenever we get a disrespected fair value gap like that, that tells me that there's a reversal coming. Like, that's a market structure shift in my eyes. So I would expect price to come back in. It's two different ways you could look at it. I would expect price to come back and tap this inverted fair value gap that it disrespected, or tap into this fair value gap that was created going in the direction that it wants to go. So as you can see, price came back and tapped both of them, because they were both pretty much inside each other, which kind of gives you extra confluence that is a better move. But another thing you want to notice is see how the candles respected the 50% of this bearish fair value gap, the fair value gap that was formed in the direction that it wants to go. That's a good sign that, you know, you're on the right side of the market, and that's, you know, these are good entries. So You see, we created the fair value gap, price came back in, tapped into it twice. We had 2 candles that tapped into it. And then boom, like I said, after we sweep one side and we get a market structure shift, I'm expecting the opposite side to get taken. And that's exactly what happened. So this was the opposite side of that move. It was taken, and then you see price come back and retest this area again, and then it digs a little bit deeper. But I mean, if you just want to be safe, you just want to get out at this point, because unless you really know what's going on, you wouldn't really know how to target anywhere further. But if you have multiple contracts in or multiple positions on, you could take half of them off, or 80% off, and just leave the last 20% on to see where the market goes, and just make sure you move your stop into the profit. So regardless, you're in the green. All right, so back with another example. So again, we're on NASDAQ again. This is a 5-minute chart, and this will be during the London session, right? So we have this London low that was created, and then there was even the Asian low down below also, right? So we come down, we sweep this London low, and before we do that, we created a fair value gap going in the opposite direction, right? And then we get an aggressive push back up where we create another fair value gap within that fair value gap. But this one is going to be a bullish one where we're expecting price to go up. So again, once we see stuff like this where we create a fair value gap going down and then we disrespect that fair value gap and close outside of it, you see these 2 candles closed outside of this red box, that's letting me know that price wants to try and go higher. So as soon as price comes back and taps into the red box or the green box, I will be looking to get entries, and then you will be placing your stop. Your stop loss goes at that swing low. Your stop will go at the bottom of this wick right here. And this would be your entry would be somewhere within this area right here, right? So like I told you before, once we sweep one side, I'm expecting the other side to get taken. So as you see, that's exactly what happened. We sweep down, sweep the London low, and then we also sweep the Asian low, which is this right here. You can see price came below that. And as soon as we did that, we had an aggressive move, displacement back into the opposite direction. Disrespecting this fair value gap, which in my eyes, I look as a market structure shift, showing me that price wants to go higher. So we push up and then we get a little pullback. Like I said, fair value gaps are like magnets. So price is going to come back in there to fill more orders. And then after that, you see we had our move up, and then we took out, like I said, the London high. That's what we would have been looking for, was this London high area. And that's exactly where price went. So this would be a London trade. So one reason why you wouldn't come up here and try and take this trade to sell, which you could, right? But this is outside of your time, outside of the London time, right? Remember I told you 3 a.m. to 6 or 3 a.m. to 5. That's 2 to 5 really is the times you want to be looking for your trades if you're going to do the London market trades. So after this point right here is 4:30, you should have been done. I wouldn't be looking for a trade to try and think is going to go back to the opposite side, because this was the move when volatility was the highest for this session. And then at this point, you just have to wait for the New York session. And then you see, you probably would have just got chopped up if you were expecting price to come all the way back down here, but price didn't want to go down here anymore. And usually London creates the low of the entire day or the high of the entire day, just depending on how it works, on what direction the market is trending at that time. All right, so 2 common mistakes that a lot of traders usually run into when they're working with fair value gaps is the first one, that they think that every fair value gap is the fair value gap that they should take. You don't want to take every fair value gap, because if it's not paired with liquidity, breaker structure, then it's just a regular gap. And then the second mistake is trading in the wrong sessions. You need to trade when there's volatility. So you don't want to trade in the Asian session when there's not going to be a lot of money flowing around in the markets. You want to focus on the London and the New York. Primarily the New York session, the New York Open is going to be your bread and butter. And I don't take too many after lunch trades, but I showed you the setup and that's how it plays out. The same goes for all 3, for the London, the New York, and then the after lunch. But yeah, just focus on the right sessions where there's volatility and don't take every fair value gap that you see. So if this video helped you see price action a little bit differently, please smash that like button and hit subscribe. In the next episode, we're going to be breaking down the entry models and the trade management and how to actually press the button and enter your trades and then manage them like a pro. Okay. And if you want to watch me live, trade these fair value gaps and just see my strategy in action, check me out on live Monday through Friday. I'll be on about 9:15 Eastern Standard Time in the morning for that New York Open trade. Okay. So yeah, lock in with your boy. Have a good one.